Hi folks, and welcome back to Meaningful Money. Okay, another sunny day here in St Loy Woods, getting back into a rhythm of doing these videos after a crazily busy start to the year. It's a very sunny day though, so the sun's in my eyes, so forgive the shades. Now we need to draw to a close now, talking about the protection side of our simple money thing. It's the setup and the insurance, right? In simple money. All about life assurance and critical illness and income protection we've been talking about. So we're just going to bring that to a close this time and talk about trusts. But before we do, I must say thank you to my friends down here in the bottom right, who is Seven Investment Management, and they continue to sponsor me here on Meaningful Money, for which I'm extremely grateful because it helps me to keep going. Now, trusts. Trusts and life assurance are absolutely inseparable. You should really say them in the same breath. It's so important that you keep them together, that if you're talking about life assurance, you should be talking about trusts as well, or thinking about them. If you are seeing an advisor who is talking to you about life assurance and they neglect to mention about the importance of trusts, you simply need to sack your advisor because they're clearly incompetent. That's how important and how inseparable trusts and life assurance are. Excuse me. So what is a trust? People tend to overcomplicate what it might be. A trust is simply a box. Right? It's a legal box. It has its own legal rules surrounding it. It has its own tax rules. So that's why, advisors have jobs and solicitors have jobs. But a trust is simply a box, and with a box you put things in it. And in this case you would put a life assurance policy in it, so that what happens to the benefits of the life assurance are dictated by the terms of the box, rather than just the terms of the life assurance policy. That the trust terms dictate what happens. Now, there's three very important sets of people when it comes to a trust. Firstly, you've got the person called the settlor, and that is the person who sets up the box. Okay, they set up the trust. They perhaps are the owners of the life assurance policy and they want to put it in trust. So if you're thinking about taking out life assurance, you would be the settlor. You would set up the trust. Second important class of people are the trustees. These are the people who look after the box and to make sure that whatever rules and instructions you have put on the box as to how it pays out, they make sure that those instructions are carried out. That's the trustees. And then finally you've got the beneficiaries, and they are the people who will benefit from what is inside the box. All right? In this case we're talking about perhaps a life assurance policy. So why then are trusts so important when we're talking about life assurance? Well, three reasons again. Firstly is speed of payout. If you have a life assurance policy which just pays out into your estate, when you, God forbid, you die, you have a life assurance that pays out, it just gets added to your estate, and therefore it has to be wait until probate is granted. And that only happens when the sum of your estate has been calculated, any debts have been paid, any inheritance tax paid. Only then can the life assurance benefit be paid out. And in some cases, you could actually end up paying tax on it, which seems a bit daft. So, that's the second thing, tax avoidance. You put it in a trust, you put a life assurance policy in trust for speed of payout, for tax efficiency, and then thirdly, to just extra ensure that your wishes are carried out for that particular life assurance policy. Obviously, you should make a will. That should be a given. We talked about that in a previous video as well. Just search for wills on the site here and you'll find it. But it makes the thing pay out quick. It avoids unnecessary tax, and it just ensures that your wishes are carried out because you place express instructions to your trustees as to who they should pay out the money to. You've got to be careful though. So let's say, for instance, you have a life assurance and a critical illness policy which are together. You quite often have those combined. Well, if you die, obviously, you want the money paid out to your beneficiaries, whoever you've said to pay out the money to on the trust. But if it's a critical illness claim, you're still going to be alive, so you want the money paid to you to help pay off the mortgage or whatever. And so you need then what's called a split trust. Your choice of who you have of trustees is absolutely essential. Their job is to look after the trust and make sure that your wishes are carried out. That might sound an easy job, but it's actually extremely onerous, particularly if, for example, again, God forbid, you were to die, a life assurance policy is in trust, and the money gets left to your kids. Well, children can't benefit from a trust. They're minors in law. They can't give a valid receipt, so they can't receive the money yet. And so the money has to be looked after and invested along the lines of some very complex and very sort of tightly woven rules until the kids are old enough to receive it. And so your trustees have a very different responsibility then to manage the money until the children can receive it. So choosing trustees wisely is really, really important. Long and short of it, trust is a specialist area. Don't do this on your own if you don't know what you're doing, or if you are going to do it, do a great deal of research. Get legal help. Seek a financial advisor who knows what they're doing and is a specialist in trusts and how they work. Okay, I've done lots more on the different kinds of trusts. Look back to episodes 89 to 99. 10 episodes I did on all the different kinds of trusts and how they work. Okay, so that's really it for protection, so we'll draw a line under that. So now, next we're just going to do a one-off and look at the new long-term care funding proposals which were announced last week. So we'll look at that next time. Thank you for watching this one. I'll see you next time.